I'm Chris Preston.
I'm Brad Simmerman.
Welcome to Street Check, the best two-person podcast in the history of Cabot Wealth Network. I'm a little thrown. Right before we came on, started recording today, I found out, Brad, that you have, not that this is a surprise to me, but you showed me you had a tattoo that's been sitting in plain sight this whole time. For everyone who's, oh, yeah, there it is, for people who are watching on YouTube. Brad and I have never met in person. He's in Arizona. I'm in Vermont. We've been working together closely for 4 years, four
4 years.
years, doing the podcast for a year and a half, more than a year and a half. What's your tattoo? You told me right before,
It's
right? I thought.
it's Naruto. It's Hiroshige Utagawa's woodblock print of Naruto. It's small views of, and I don't ever remember the number of the Japanese prefecture's favorite woodblock print artist. Same guy that did that up there.
For those
It
on YouTube.
brought. It was like the first commercial art in Japan, like commercially produced. Like you couldn't own art unless you bought a painting, and now with woodblock printing you can. I always loved the technique. Seemed like a natural fit for me. So it covers half my arm.
And Madison, our producer, you revealed that you also have a couple tattoos, correct?
I do. I have a couple small ones. I've never I think 45 minutes to an hour is like my max. Like how long did yours take, Brad?
16 hours over 2 days, 3 days.
Oh my gosh. I
Maybe it was closer to 12. I think he quoted me 16, but I think he got it done in 12 because we just power through.
oh my gosh.
When did you do this? When did you get yours? Years ago?
The My first one I got 20 years ago. This one I got 2 years ago or so,
Oh,
year and a half
wow.
ago, maybe. It's
Wow.
been a while, but yeah, I like it. It's
Good,
nice.
good luck, charm, to launch the podcast.
Chris, none for you?
What would be your guess?
No,
No.
of course not.
No, no.
Why not?
Not. My sister has several. No, not for me.
It's
Okay.
cool. It's art that you get forever. Art is awesome.
Right,
Get art.
right.
Support art.
Yeah,
It does
but
life with you. It sags with you. It's there with you.
I know. But some, you can often regret that. It sounds like, Madison, you've even regretted how the design on one or two of
I do
yours.
have some edits. Yeah.
Yeah, some edits, and that's the thing. You can't really edit.
You can cover it
You
up though.
cannot.
Yeah, as an editor, I know that things always need to be edited, and I could never do something that permanent.
I did
Um,
get one removed one time, and that pain is worse than
oof.
actually getting them because it's like going over scar tissue with a laser,
Yeah.
That was
I can't.
I think
I think I'd rather give birth naturally again.
Wow.
I think the trick is you avoid stuff where it's like if it looks bad, it's terrible. Like somebody's face, right? Like, oh, I'm gonna get my wife's face tattooed on my arm. And if it looks bad, it's a life ruiner. Or like, you know, individual relationships are probably not the way to go. Uh, You know,
No. Maybe that might have been Madison's edit or removal.
I still want
go
my dog. I'm still at some point in my life I will get
Yeah.
OP space somewhere.
Yeah.
I think the paw print one you could probably get away with pretty easily. You can keep it small. There's less room for the tattoo artist to mess it up. Just something
But
like
paw
that.
prints are not unique. Like
No, they're not. That's
all
part
paw
of my
prints look the
pitch.
same.
Yeah, it's hard to mess up.
I
And
can't.
then when you get a new dog, it can be that dog's paw print.
No, Brad, don't talk about a new dog in front of my current favorite, only dog that I'll ever love in my whole entire life. He'll always be my favorite.
Okay.
If I ever do get a tattoo, it'll be a street check tattoo for sure.
Obviously.
Don't do that.
Yeah, I know that.
Ooh, I see a summit. Summit
Yeah.
event.
Chris and I get matching street check tattoos.
Yeah, while at the summit next year. Okay, let's get to the market. Brad, tell people what we're going to talk about today.
Uh, we are going to talk about
Aside
Bitcoin
from
hitting
tattoos.
all-time highs. We're going to talk about inflation sticking around a little bit more than I think most people would like. We're going to talk about Rocket Labs, which reported earnings and had some really solid results, and space stocks, I think, in general. And then we're also going to just take a deeper dive into some of the earnings season winners and losers. That's really fallen into the background with the political environment. So we'll give some of these companies their due.
Yeah, and before all that, as always, we have our defend the take. And Brad, you're up this week, and your take, for which you have 90 seconds to defend, is that the post-election sugar rush has worn off. Now, treasuries will tell us where the market is going next.
Okay. So obviously everybody saw the market rally pretty significantly in the few days immediately after the election. Um, Rallied like 3%, I think, across the board. And then we topped out. And we stayed topped out for a couple of days, and now we're trading lower. Um, at the heart of the issue is that there are, I think, conflicting policy proposals from the new administration. Obviously, a big part of the spike was speculation about tax cuts, improving the bottom lines of companies, deregulation, making it cheaper to do business in the US. But then the sort of conflicting narrative is tariffs and high government spending, both of which are very inflationary. So there's a push-pull between high inflation in the future and the possibility, honestly, of a recession at this, not immediately, but once these policies take effect, and better business conditions. And the push-pull is which one will win out over the other. We don't know. And we're not going to know until some of these policies actually start getting rolled out. But one place that we can look, at least as far as how smart money is pricing it, is into fixed income. Treasury yields, the 10-year specifically, just tested over 4.5% today for the first time in 4 months or so. If we see the treasury rates hold around 4.5%, maybe even test a little bit higher than that, we're probably still in the clear. We are still in a bull market. Technically, trends are still up. Moving averages are still moving up. It's like a technical setup that you love to see. And even with today's negative action, we're still in good shape on the technicals. But if we start seeing treasury rates creep up to 5%, above 5%, that means that the bond market is pricing in a lot more inflation than the equity market is. And the equity market, the risk premium for the first time yesterday is effectively zero. You are not getting paid extra for taking the risk of equities. High rates that say...
I gave you an extra 25 seconds. But
oh, yeah. Sorry about that. Yeah. Pay attention to rates. If rates keep going higher, the bond market's pricing in something the equity market is not.
Yeah. Yeah, I mean, I think that's probably right. I do think, the initial sugar rush has worn off a bit. Although, as I mentioned last week and wrote about this week, it's not it's normal for there to be a honeymoon phase between election and inauguration in the 2.5 months between the two, especially when there's a new candidate or new. This is
administration.
Unique. Yeah, new administration. This is unique, not new, but new or not
presenting,
not an incumbent. Yeah. So the average, I think, is average bump has been like 10.5% after the last two elections, 8% after the last three. So and the market S&P is only up like 3% or something since election day right now. So I do think we're going to still have another good 6 weeks, 2 months, through the end of the year, November, December, holiday shopping season, all that is typically good for stocks. And, you add in the Fed cutting rates, but yeah, it's remarkable how little the Fed cutting rates has effect. I mean, if anything, treasuries have gone the other way. As the Fed has cut rates, the treasury just keeps going higher. Maybe part of that is a realization that they're not going to cut as fast as it seemed after that first 50 basis point rate cut, which is becoming clearer and clearer that and we're going to get to this shortly, so I'll leave it for that. But it's becoming clearer and clearer that the Fed isn't going to quite have its foot on the gas pedal the way initially thought.
Yeah, and just to put some numbers behind one of your comments, S&P rose 3.83% from Tuesday the 5th from the close, so immediately before we started getting election results through Monday. Now it's up 1.7%, so it's given it back,
all the way down to 1.7. Wow.
Yeah, it's given back about half its gains. Today's been a little bit rougher than the last week has been.
Yeah.
Last week's just been kind of choppy. But yeah,
That
we've
gives me
got
my own take. Buy this dip. That's my take.
we're
Maybe
still in a
Monday. Maybe wait till Monday.
yeah, give it a little bit to settle out.
Yeah.
I don't know, like a little bit of a sugar headache doesn't ruin your Halloween. I don't know. I don't have a good analogy for
Eventually
it,
the
but
sugar headache, wears off, and then, you can go back to just eating normally, right? Although,
yeah,
except for with my kids, they're still eating Halloween candy like once a day. Uh,
yeah, that's the hope though, right? Is like, look, we
yeah.
got a little bit overheated. Everybody got exuberant coming out of the election, and now people are looking around and saying, okay, well, where are we going to see like meaningful growth as a result of some of these policy changes? What's actually coming? And there's a lot of promises coming out of the administration. We'll see which ones hold up. You know, it's so
Yeah.
tough. Like we saw biopharma companies take a hit based on an HHS appointment of RFK Jr., which is not even confirmed yet. So it's very speculative right now, and you don't want to take too much of your long-term strategy away from short-term speculation.
Yeah.
So you give it time to settle down and sort of pay attention to some of the other indicators that are out there. Um,
Well, speaking of speculative, let's move on to our first item in our big three, and that's Bitcoin rising to new all-time highs, which I think you and I both forecast a few weeks ago. I'll have to go back and look, but I think you and I said it would get there likely after the election. It got there probably a lot quicker than you and I thought. It topped 90,000 a couple days ago. It's now at 88, mid 88,000 range. Um, from the time of Trump's election, 10 days ago now, until the top was 2 days ago, 3 days ago, the 12th at 90, at least the close was 90,584. It went from 69,000 to 90,000 in a week, 8 total days. And was that 5 trading days, 6 trading days, six
yeah,
trading days.
so it popped more than 30% in a
Yeah.
week. Like you said, sub 70,000 before the election. It was 77,000 by November 8th, broke 80 by November 10th, and intraday highs I think were as high as 93,000 on like the 13th. And now it's back down to 89. It's well, it doesn't do anything new after the election, right? Like you can't pay for your coffee easier with Bitcoin just because of the election. It's playing out, I think, the way that you and I have largely said, which is it's a risk asset. There have been a lot of nods to crypto in general from the administration. I mean, Elon Musk's Department of Government Efficiency, Doge, takes its name from an internet meme, which became a really heavily traded cryptocurrency, Dogecoin, and
That had a moment. That was a thing for a little while, a couple years ago.
yeah, and it's had a resurgence. I think it's up like 100% in the last week, simply
Yep.
because I seem to remember Elon Musk saying that you could pay for Teslas with Dogecoin and crypto at some point. It's that wild speculation and it's the exuberance. Um, there are probably meaningful policy changes as well. Trump gave an indication that he would fire Gary Gensler uh, of the SEC, who was a foil for the crypto community for a really long time. Basically, all of the lawsuits against these cryptocurrency exchanges, backing groups, etc., came under his watch. So deregulation does play to Bitcoin's benefit a little bit. Um, if you are looking to trade Bitcoin, I wrote about this earlier this week. MicroStrategy is a really popular, basically leveraged Bitcoin trade. It's they issue debt and equity to buy Bitcoin, and then they also have a software component. Michael Saylor is the co-founder, and he's very vocal crypto supporter. Honestly, the easiest way to do it is some of those Bitcoin ETFs out there, like IBIT. It's high volume, low expense ratios. All it does is hold Bitcoin, but it's I don't know. It's the casino of investing, right? Like you don't go to Vegas and say, okay, well, I'm going to make my rent on blackjack. right? Like that's unhealthy. Don't do that. And don't do that with crypto either. But if you are taking a flyer on this and you think that there's more room to run, I don't know. I think I jokingly said it would hit 100,000. Maybe it does, right? Like psychological breakpoints are more important with crypto because there are no fundamental valuations for it. So
Yeah.
it's all technicals, it's all psychology, it's all momentum. Um, I don't know. Are you buying crypto now?
No. Yeah, I mean, I would buy at when it's what was it? A year? Was it a year and a half ago, last summer, or maybe early last fall, when I was like, buy crypto, because I think it's going. I think it's what was it, like upper 20s, and I said I think it was going above 40,000,
Yeah.
which it did quickly, and then I doubled down and I said I think it's going above 50, 60,000, which it has. In bull markets, especially at the start of a new bull market, I would absolutely buy, anything crypto related as sort of a hedge. Some of the ETFs and stocks you mentioned. MicroStrategy is what,
It's
MSTR?
MSTR.
Yeah.
It's like a three times Bitcoin performance wise.
Yeah. I mean that if you can
Bitcoin,
handle the volatility, um, I think this at this mature a bull market, and with the history of Bitcoin is that it rises to new highs, maybe highs not even imagined prior to, well past the previous highs, and then they crash. Then it crashes. I'm not saying that's going to happen right this second, but I think it's already on borrowed time. And any slight hint of the bull market starting to deteriorate, not that we're there at all. Like I think Bitcoin falling back presages a market pullback, or at least any remote weakness, and Bitcoin will really start to fall.
the other thing I just wanted to bring up because um, assuming that Bitcoin just holds here for a while, somebody like a Coinbase might be an alternate pick just because they're the toll booth, right? They're doing
Right.
institutional custody and they're doing trading volume and stuff like that. But yeah, it feels like a suspect time. It feels more worrisome than just a wall of worry. It feels like a
Yeah.
suspect time to pile into Bitcoin once it's risen
Yeah.
32%. It's gotten its pop.
I would treat Bitcoin almost like cannabis stocks. I mean, Bitcoin has had much higher highs, especially lately, than cannabis. But Michael Brush, we have him on all the time, at chief analyst of our Cabot Cannabis Investor, and he's anytime it pulls back, he's like, buy the dip. After all cannabis legislation seemingly failed on in Florida and the Dakotas on election day, cannabis got slammed, and Michael's like, buy, and sure enough, cannabis stocks are up. Bitcoin isn't quite as fickle as that, but and unlike cannabis, people use cannabis.
Yeah.
People don't really use Bitcoin. It's just a tool for the most part. Some people do, but not.
Well, even I think Argentina made it an official currency, and there's been reporting, like reporters have gone down there to see, hey, what's the on the ground reality of it? And it's like 94% of transactions in the country don't touch Bitcoin at all, or so it was some statistic like that, where it's like, no, you can't, it can't be a currency. If
Yeah,
my dollar lost or gained 30% value overnight, I'm not going to go buy bread if
right.
if bread's costing me $2 and tomorrow it might be worth 260 or cost 260 because of the massive volatility of the underlying currency. It's not a good stable currency.
Yeah,
And it never has been. It is entirely a speculative asset. If you love it, if you're a convert, like I'll say this much. The people that love it really love it, and they tend to hold up the price a little bit, maybe more than it deserves. But um, if you're on the fence about the bull market at all, stay away from something that's just an aggressive bull market play.
yeah. I think start of the next bull market, buy Bitcoin. Then that would be a good time to buy it, I think. Okay, let's move on. We touched on it. The latest inflation report came out. Was it 2.5, 2.6? Was the year over
So
year number?
Yeah, so we had two inflation prints. CPI came in at up 2% month over month, up 2.6% year over
0.6.
year. That was against 2.4% expected. But the comparison, it was a tough comparison because this time last year inflation was coming down harder.
Yeah.
So it's a little bit elevated for that. But core CPI also, let's see, that was up 0.3% month over month, 3.3% year over year. And then we also had PPI was up 3% versus 0.1% month over month expected, and 3.5% year over year versus 3.3% expected. So they've generally just been sort of holding higher than people, I think, want to see, but it's
Yeah.
not like a massive reacceleration of inflation by any means.
Remember, months ago, 6 months ago or whatever, it seemed like getting over the 3% below or under the 3% threshold, which seemed like the magic number for the Fed, it took a while. Sticky inflations with this, it had morphed into, it went from, you know, uh, transitory inflation to really bad and really high inflation to sticky inflation, and now is around the 3% number. It seems like we reached another sort of sticking point, and that seems right in at least on a year over year basis in CPI, around 2.5%. Fed has said it wants to get inflation down. It wants to see inflation down closer to or 2% flat, basically. Doesn't mean they're going to just halt their rate cutting program until it gets there. Clearly, they just cut rates again, but it does seem like they might slow play things a bit until they see a little bit more progress.
Yeah, Powell came out on Thursday and said that the Fed was in no rush to lower rates, and it flipped the expectations, or at least the market pricing of expectations of a cut in December from 80% to 60%. Now, like in fairness, that had gone from 60 to 80 in like 3 days. So then reverting back to a 60% probability overnight's not really that big a deal.
58.4 now. Not a big difference, but still falling.
Yeah, the market largely expects more rate cuts. And we saw progress in some of the places where it mattered, right? Like fuel, food and energy prices came down, have been coming down more. Shelter inflation has been sticky.
Yeah.
The problem with shelter inflation is all of the campaign promises, the tariffs, deportations, like all of that stuff makes shelter more expensive. If we're importing, like obviously it depends on how it's applied, but like if you're building a new build and you've got an air handler that was built and assembled in China, your AC system was probably built overseas or assembled overseas, ABS pipe, metal, like all these individual components coming in are high. That's going to raise new build prices, which will then have a trickle down effect and raise existing home prices, which will then raise rent prices. If you've got a crackdown on immigration, you're losing probably a lot of your labor force. So some of these, the thing that's a problem now is probably going to stay a problem. Like even if gas prices keep coming down, that's not really getting at what is causing inflation right now, I think is where I'm trying to go with this.
Inflation has been the story of the last 3 years. I mean, 4 years, 3, 4 years, basically. It's why Trump's, won the White House again. It's why, and I guess maybe more importantly, why people were reluctant to go with Harris, because she was, a proxy
Promising.
for Biden.
Yeah.
And people care about their money more than, any other political issue. And inflation, 9% inflation was hard on a lot of people. And it was high for a long time. And even though it's come way down, the reverberations are still being felt. And I think high inflation is a big reason why we've seen so much money still on the sidelines in terms of the market, so much money in money market funds. Big part of that obvious is with high inflation comes high rates. But until that's the reason why the Fed is going to slow play this until they are fully confident that it's come down, because they don't want to go back to it because it's incredibly damaging on, people's wallets, psyche, investment psyche, everything.
Yeah, yeah, definitely. I mean, if the Fed doesn't cut in December, my concern, I guess, maybe at the midpoint of this year was more the labor picture than the inflation picture. It seemed like inflation had been fully beaten. But if the Fed doesn't cut in December, the way the market's been moving lately, I think you'll get a pretty negative reaction. But I don't have any reason. Powell saying the Fed's in no rush is not
Yeah.
equivalent to him saying we are not cutting in December.
I, I think it's been tamed, but not fully beaten, to use
Yeah.
whatever you said. If it comes in, say, next month, 2.4, maybe there'll be, maybe we're back to the, celebrating decimal points the way we were when it was really high. But we're still in a much better place than we were back then. I don't even want to think about when it was, in the 9, 8, 7% range. Okay. Last on our big three, space continues to have a bit of a moment. Rocket Labs had a big earnings beat 2 days ago. I'll let you dive into that one.
Yeah, so Rocket Labs came out, they're up 28% since the 11th of November. They reported on 11/12. Q4, I think Q4, maybe Q3. I don't remember what their fiscal year is. But revenues of I'm sorry. Q4 guidance revenues of 125 to 135 million came in above expectations, which was the prior high end of the range was 121 million. They announced a new launch agreement for a satellite constellation, and they projected that their addressable market for the company could be as much as 10 billion by 2030.
Yeah.
The stock is up 200% year to date. All the space stocks, we called them out on the podcast, 2 months ago, maybe. All the space stocks, the Redwires, the Lunars, which is Intuitive Machines, Rocket Lab, ASTS, I think all of them are up 150, 200, 300%. The meta narrative around space is still there.
Mm-hmm.
The issue that I'm running into, because I was bullish on space. I think we can agree on that. I was very bullish on space. Yes, yeah. I mean, you have obviously.
I'm going to mention one here soon, but yeah, go ahead.
So, the thing that has me a little bit concerned is Elon Musk, right? So I think when we talked about Rocket Labs the last time, talked about how SpaceX is responsible for like 96% of upmass of all satellite upmass. Everything that gets put into low Earth orbit goes through SpaceX. If Musk is favored nations now, there's nothing to prevent NASA. I mean, like NASA has policies and procedures that they recently put in place to try and build out redundancies in their launch platforms and their launch programs, and to allow for more competition amongst other companies. But there's no guarantee that remains in place. So if SpaceX just once again becomes like the de facto launch platform for all satellites, which they're pretty much that already.
Yeah.
The Rocket Lab Neutron rocket, which isn't going to be completed until 2026, but they already have commitments for. That's part of the reason that they ran up after earnings, is people are already buying into it. If Neutron isn't getting a thumb on the scale in their favor, and it's all in favor of SpaceX, then you've got to sort of wonder how much they can really continue running and how much they can really benefit from this meta narrative or this renewed interest in space and investments around there.
Yeah, I mean, I guess you could make the argument, just to play, a bit of devil's advocate. What Musk obviously being in favor of the new administration is good for SpaceX, which could be what's good for SpaceX lifts all boats, kind of a deal. The way that Tesla is, his original company did with EVs, and then the way that Nvidia, the strength in Nvidia has sort of trickled down to other semiconductor AI type companies. You could make that argument, at least from an investor perception.
Yeah, the problem with that is like Ford lost what, $1.5 billion last quarter on their
Yeah.
EV segment, and
I'm more
now,
talking about EVs like, say, 5, 6 years ago, when they
yeah,
were hot. Yeah.
my thinking is just that they could easily become a money loser because now Musk and Tesla are pushing or are on board with the promise to remove the EV tax credit that
Yeah.
was floated just either yesterday or the day before, which directly hurts their competitors but doesn't hurt them so much because they're already well established and pretty well vertically integrated. So it's pulling up the ladder behind them a little bit, and obviously that took a decade to play out with Tesla, and maybe that's the case with SpaceX as well, but I don't know. There's
Yeah.
just so much uncertainty with there's an outsized uncertainty with space spending because it is entirely federally funded. I mean, like obviously private companies are paying to put satellites in orbit, but if you want to launch something into outer space, you need the federal government approval, and there's a lot of question marks there.
Yeah. Maybe that's part of why. One of the companies I'm going to mention in a minute, launched before the election. But speaking of which, let's get into so we haven't touched on earnings a ton, even though the earnings season is basically winding down at this point, for obvious reasons with the election and rate cuts going on and all sorts of other things. But it's been an inordinate amount of wild swings after earnings reports, in both directions this season. Despite this not being a terribly volatile market on the whole, but we each picked out 3 stocks that had big reactions, again, in both directions, to earnings, that we wanted to highlight. So Brett, I'll let you kick things off with your first one.
Yeah, before we do, just point to the volatility of it. So far this earnings season, 200 companies that reported to have moved up 15% or more compared to 159 as a 3-year average. So more moves to the upside. By that same token, 195 have lost 15% or more compared to 164 as a 3-year average. So you're seeing bigger moves on the outside there. The first one that I wanted to start with, I wanted to go with stuff that was maybe a little bit off the beaten path, just to see how other companies are seeing earnings versus just the go-go growth stocks, which are obviously benefiting from a frothier market. Burberry, the British sort of fashion icon, they popped 19% yesterday after their earnings report. They reported a $1.4 billion US, or about 1.1 billion pounds, I believe, first half profit, which was down 22%. They lost 74 million pounds, it was down 147%, but they popped 19% because they announced a turnaround plan that they're calling Burberry Forward. The reason that I put this on my list is because it's easy in a really frothy environment, or in the kind of environment we've seen in the last week, to overestimate just the market's perception of growth. This is a company that's been struggling. When we talked to Larry Chung, we were talking about luxury goods being a point of weakness because a lot of the Chinese buyers are not interested in it any longer. And that has played out. So luxury retailers have taken a hit for the last 6 months, the last few years, honestly. Investors are still willing to give a company credit for a solid turnaround plan. So if you are looking at a stock ahead of earnings and they're struggling, if you think that management is competent, if you think that they can right the ship, there is still room for outperformance with some of these turnaround names. It doesn't just have to be growth that beats and raises or repeats that cadence like quarter after quarter.
Okay, good pick, or good one to highlight. I'm going to go right on the beaten path. Tesla. Now, we talked last week a little bit about the Tesla's bump after, Tesla's Trump bump, because of his Musk's prominent role in the Trump cabinet now. But even prior to that, Tesla stock got a 26% bump in 2 days after reporting earnings in late October, October 23rd. And it was a decent quarter, but I guess maybe that expectations for Tesla really come in after really three straight really just bad quarters, especially by their standards. It brought in $2.17 billion in the quarter, up from $1.85 billion in the same quarter last year, but those short of revenue estimates. Earnings improved and actually did beat estimates. 72 cents per share on an adjusted basis, way ahead of 59 cents per share. So, I mean, bottom line beat usually goes a long way. But, because of the revenue miss, you'd have thought, the reaction might have been a little bit more mixed, but 26%, 2 days. We saw something similar last quarter from Tesla where the beat was, the results were even more modest, is way less EPS growth. And yet the stock took off, not quite to the same tune of 26% 2 days, but I think Tesla's acting in a complete opposite way of what it used to, whereas it used to have such a high bar to clear that it really had to wow people to, get the stock to really move after earnings. Now, expectations have really come down so much for the company after, several quarters narrowing margins and, profit losses, something you never heard from this company before, that, the bar is been lowered so much that, clearing it by, 13 cents on EPS was cause for celebration. Tesla is one. And now Tesla obviously has gone into the stratosphere. It's over $300 a share now, but that started almost a month ago with earnings.
I wonder if part of that is that their earnings showed that they were stable enough to speculate on, right? Like the core car company is still doing really well. And now Musk's sort of favored nation status with the new administration. I think we had speculated on that a little bit when Jacob was on a couple of weeks ago before the election.
Yeah.
I think we were doing the roundtable. But they are in the best position. They're the most American car company by input. It's like 80 to 85%, I believe, is what their inputs are for domestic manufactured product or materials. They're making money on EVs, whereas all the other auto majors are losing money on EVs. They will directly benefit from restrictions on Chinese EVs. Those were the big competitors. We talked about, $25,000 EVs going into Mexico, South America, stuff like that. Like they can weather the storm, I think, better than any other EV manufacturer. And EV adoption has picked up pace a lot in the last couple of years.
Mm-hmm.
It's a little bit crazy with their valuation being as high as they are, but I like Tesla more at 300 than I did at 150.
Yeah.
Especially with that SpaceX stuff that we had talked about. And
yeah, and it's becoming a little bit of a zero-sum game, or maybe Tesla is starting to enter the Netflix phase where it's just, so dominant in its space that sort of sucks up all the oxygen and investment dollars. BYD, which, a company I've highlighted in the past, I really like. Its growth is in China, especially. It's sort of overtaken Tesla. It really had a great stretch from late summer, from 53 a share in August to early October, got to 83 a share. And then basically since the Tesla report, even though BYD continues to report strong numbers itself, since Tesla's report, BYD has pulled back. I think it's pulled back more since, Trump's election, along with a lot of other Chinese stocks. But it's interesting that it's almost like, whereas Tesla used to have sort of like I mentioned before, rising tide lifts all boats effect on EV stocks. I think it's becoming a little bit more of a zero-sum game, not zero-sum, but there's only so many amount of dollars people are willing to spend on EVs right now.
Yeah. Yeah. I wonder if maybe we're hitting sort of the consolidation phase where you start seeing one brand really pull ahead of the pack. Like we saw with smartphones, there used to be way more smartphone manufacturers. Now it's pretty much like Samsung and using the Android operating system and like Apple.
Yeah.
It's not a great one-to-one, and I don't have any data to back this up. Just speculating on the fly. And I wonder if maybe we're hitting a little bit of a consolidation in the EV space, especially now that maybe some of the federal dollars are drying up with the expiration or the presumed repeal of the EV tax credit.
Yeah, it could be. Okay, what's your next earnings reaction?
Next one I wanted to highlight was Marathon Holdings. It's MARA. It is a Bitcoin miner. They were up as of yesterday's close 7% in the last week, but they've fallen 20% since earnings. They came out and reported 131.6 million in revenues against 151.6 expected. They lost 34 cents a share, and that was more than the 26-cent EPS loss that was expected. It's a company that should have been doing well. Like I said, they're still up 7% in the last week, despite their earnings miss on the 12th. Bitcoin rallied 30%, right? Like the environment is perfect for miners. The environment's perfect for anybody that even touches crypto right now, but individual results do still matter. If you are a company who sends out press releases about how you're going to use some of the waste heat from your Bitcoin mining to funnel it to shrimp farms, or if you're pitching a business model that doesn't make sense, strengthen your sector, even with this environment, is not enough to overcome that. So,
yeah, that's a good one. It shows you that even a bad earnings report, or not as good as expected earnings report can even combat a narrative like Bitcoin or crypto, getting the post-election bump. Sorry, go ahead.
Yeah, I'll also say that I think miners are kind of a stay away. If we're going to have higher costs for their key inputs are chips and GPUs, if the CHIPS Act if there's pushback on that, if there's higher costs there, like the cost of operating a Bitcoin miner could be really high. So Bitcoin could skyrocket, but it doesn't necessarily make mining for it a better business proposition if your inputs are all really high. They also spend a lot on energy, so it's not necessarily an easy narrative to pierce, but I think I'm pretty lukewarm on miners in general, even if I'm bullish on Bitcoin.
Yeah. Okay, my next one also dovetails with a subject we mentioned earlier. AST SpaceMobile, company we talked about. It is sort of an upstart company that's trying to bring internet straight to smartphones through low Earth orbit satellites, which they launched 5 of, called Bluebird satellites, in about mid-September. Stock got a huge bump leading into that, and through the first 9 months of the year, it's still up 200% year to date. But reported earnings yesterday that really missed the mark. Now they've been pre-revenue up until this point, so there's a little bit of guesswork of what they might actually bring in. But they were supposed to. The expectations were a loss of 23 cents per share. They lost $1.10 per share. Ooh. And revenue was expected to be $1.8 million, and it was $1.1 million. So the stock is down 15% today. It's right back to irony is it got a lift from Rocket Lab's report the other day, and it's right back to where it was prior to that report. So I guess no blood in the aggregate. The one that's short-term bad news for AST SpaceMobile is not growing as fast out of the gates as maybe expected or analysts expected. The good news is they secured a new launch service agreements, which will allow them to expand cellular broadband coverage across global markets. Right now, they're initially targeting US, Europe, and Japan, and also some US government contracts. But the next block, this new contract will allow them to launch about 60 more satellites. Remember, they have 5 now. But in sometime either next year or in 2026. So, the long-term view is still, if you're taking the bullish outlook on space, I'd say AST is maybe winning the long game today, but not not in the short term. They had a bad quarter, and they got knocked back accordingly, 15% today. I've been high on AST SpaceMobile, and this could be a buy the dip opportunity, but might want to wait for things to shake out a bit. 15% is quite a pullback.
Did they specify in that release if their contract is with SpaceX? I presume it is. But
it lists them as both a SpaceX rival and partner. But so yes, I think let's see, it doesn't call out SpaceX by name as part of the recently launched service agreements.
Yeah, that's probably with the cell phone operators would be the service agreements, but the launch agreement I presume would be with SpaceX because like I said earlier, like 96% of all satellite volume goes through them.
Yeah. Yeah, I mean, the launch of the Bluebirds in September was with SpaceX, so I would assume that this would also the next launches, the remaining launches will also be through them.
That's good progress. My recollection is they wanted to get 110 or 120 or so satellites up in
168 now.
So they're upping that target. I think the cost for the satellite is relatively modest. I think it's like $1.5 million replacement cost. So as long as they can get it up there and then the tech works in an array, they've got a lot of opportunity. So I think you've probably got a long lead time, but it's like the catastrophic risk to them is no longer that the satellites don't even deploy. It's a matter of them just being able to demonstrate that their business model works and they can generate revenue from people using it. So I think they're in a great position probably for the longer term. Than
they've now demonstrated with the Bluebird launches that they can successfully launch the satellites themselves, and everything works. Now that like you said, need to demonstrate that they can actually make money off of them. Pretty ambitious, 100, whatever I said, 168. They now have 5. Stock is still up to 283% for the year, so they're doing fine. But there could be some growing pains for sure, as we just saw. All right, what's your final earnings blow up reaction, I should say?
My last one, this is just leaning into the frothiness. Carvana, they're up 15% since they reported earnings on October 31. Their earnings per share down 82%, net income down 89%. They're currently trading with a forward PE of 119 and a trailing PE of 26,000. Year to date, they are up 395%.
Wow.
They earned 64 cents against 24 cents expected. They had 3 price target hikes after earnings. This one just absolutely does not make sense to me. Their service seems to be really good. They overpay for cars when you sell them. I've recently sold like 2 cars to Carvana, but the fundamentals don't make sense. But one thing that has stuck with me, I don't know, I think it was Jacob that was saying it's like, hey, people don't sell stocks because of valuations. Especially with the momentum names. So some of these momentum names, they're just going to work. Like in a just world, Carvana would probably be trading at a fraction of what it is now, just given earnings and valuations, but that's not how momentum works. So some of these names that are especially growth focused names that have a lot of momentum, that have a lot of juice to them, they can keep rising, even though it seems counterintuitive and even though the fundamentals may not back it up. Some of these you just got to sort of shrug and stay away from if you're innately bearish.
Yeah, that's I forgot you'd done business with Carvana recently. What was your car that uh you sold a car there, right?
Yeah, when my wife got the Mach E, no, before my wife got the Mach E, we sold a Hyundai there. I just sold a Jeep there,
Right, that's what I was thinking.
and super easy process. Paid way more than Kelly Blue Book on the vehicle. Um, Great to work with. I just have no idea how they're making as much money as they seem to be, or how they're making enough money to justify where their share price is trading at. It's a $50 billion company. Their margins are better than like a private dealership. But I think a lot of it is coming from how they package vehicle loans,
Yeah.
because there's some shadiness around the founder's father who's with Drive Time. So there's some accounting tricks that are in play. I know Hindenburg Research has gotten repeated requests to do an in-depth short report on them. Um, like to the
Yep.
point where they've acknowledged it in social medias and stuff like that. It's a name that makes no sense to me, even having worked with the company, but market can be irrational longer than you can stay solvent if you bet against them.
Yeah. Okay, my last one. Dutch Bros, not brothers, Madison. Dutch Bros.
Thank you. Now I feel like I can tell my friends that I produced this podcast because all you guys were saying Dutch Brothers for like an entire episode a couple weeks ago.
Yeah,
And
I can't believe you didn't jump in and correct us. You should have.
I was cringing so hard I couldn't remember how to unmute myself.
Yeah. I mean, they're spoken like, you know,
It's
two clueless 40 something
it's like
dudes who have never been to a Dutch Bros.
I
I
have I've been to Dutch Bros, but it's like the Steve Buscemi bit. I think I don't was it from Community or something like that, where he's like he walks up with like a shirt that says sports and he's got like a backwards hat and a skateboard. He's like, "Hello, fellow teens." He's
Yeah.
clearly a 40-year-old man. That's us.
Yeah.
Well, that's
In
fine.
my defense, there's not a Dutch Bros, and I don't think in the state of Vermont. Not that I've seen, at least. There's
That's so
none.
sad.
I know we've got a lot of a lot of mom and pop shops around. A lot of no, we're not big on chains here. There's Starbucks, and that's about it. But
Kind of great though. The mom and pop stuff is
yeah, they're great.
I
Yeah,
like
some
that.
really nice, tasteful, cozy coffee shops around here.
Yeah. How how Christmassy.
I know, very.
Hallmarky.
Yeah, exactly. Yeah, I go to work from one, once every week or two. It's nice. Okay, so anyway, Dutch Bros. Uh, their shares were up 46% after earnings. And this was last Wednesday, a week ago. Earnings were good. So it is a fast expanding chain. Earnings came in 16 cents, well ahead of 12-cent estimates. Sales up 28%, 338.2 million. They launched 38 or opened 38 new stores across 11 states. In the quarter, the goal is to open 150 of them this year. They're now up to 950 total locations. The goal, I think, is to get to like 4,000 by the end of the decade, from less than 1,000 now. So it's pretty ambitious. They up sales guidance to a range of 1.2 for full year, 1.25 billion to 1.6 billion. Boosted EBITDA estimates 215 million to 220 million. That's a lot of numbers, but regardless, the market loved it. 46% bump in like a day or two. If a Dutch Bros shows up in Vermont, then it might be time to sell. But right now, well, they're in this growth phase. I think it's a really good stock, even after the 46% bump.
Yeah, that's that. I'm glad you brought Dutch Bros up. Dutch Brothers. Sorry, Madison. Just kidding. No, I'm glad you brought them up because that's like the sweet spot for this market, the catnip for the market, where you've got high growth potential, good results, promising even more growth, and a pretty achievable glide path to get there, right? Like I think their repayment rate on locations is pretty low. Like it takes them like less than a year or less than 2 years, something like that. I
Yeah.
don't know exactly, but they repay for store openings very quickly. They're growing fast. People love them, and the stock price is rewarded commensurately. Like you said, they're up 40%. Like if you've got, I mean, we're a little bit late in the earnings season, but we've still got an Nvidia coming up on the 20th. But if there's a growth stock that you like, that you're bullish on, that has that kind of growth profile where it's like, hey, beat and raise has been their cadence for a while. They're anticipating a lot of upside in the years ahead, and you think they're going to beat, I think they can surprise you more than I think they can surprise you to the upside. That's a good poster child for this earnings
Yeah.
season, especially when it comes to growth stocks.
And even with the 46% post earnings bump, still only up 47% year to date. It had been floundering for a few months, basically since its last earnings report. So, it's not like some of the other stocks we've mentioned here that are up, 200, 300+% for the year. It's not, one earnings report didn't push it to like unreasonable valuations. It basically just pushed it above its July highs. So yeah, I think, Dutch Bros, I think is, by the way, it's all drive-through coffee, for those, Madison knows all this, but we're still learning, obviously. Okay, I think that's all of our earnings blow up talk for the day. One thing I wanted to mention before we go is right now we're offering our Cabot turnaround letter investment advisory service for half the normal price. That's run by Cliff Droke, who we've had on the podcast. It's you can get 50% off if you go to cabotwealth.com/street right now. 50% off the normal price, and it's 30-day 100% money back guarantee if you just want to try it out. But again, cabotwealth.com/street to get Cabot turnaround letter for half off the normal price. Cliff does a really good job of finding turnaround opportunities, and there's plenty of those out there now. Any closing, any parting thoughts or words of wisdom, Brad?
I love Cliff. Cliff's great.
Cliff's great. Yeah. Cliff, Dutch Bros, we're high on.
I'm going to take Cliff
Bitcoin.
to Dutch Bros if he ever comes out here.
There you go. Bitcoin, less high on than the market, at least right now.
Yeah, and watch that 10-year yield. Nasdaq's down 2% today. S&P's down 1.5%. We're not in a bear market by any means. We're still in a strong bull market, but keep an eye on those yields.
There you go. Keep an eye on the yields for the next week, and we'll see you back here next Friday.